in our financial planning process, we here at Mosaic find that often we need to bring up the question of long-term care planning with our clients because it's something that people do tend to kind of put off as a decision that they want to make till farther down the line. However, it's really important that you do spend some time thinking about it in advance because the financial impact of having to cover long-term care costs can actually be quite expensive. And some people, it really actually is something they become much more aware of once they are dealing with helping an elderly parent or another family member with handling their long-term care needs. And that's when they start realizing that it's something that they should address for themselves as well. It can be a somewhat complex picture of how you handle it. And so that's why we have our expert in today, Deb Rauser. She is a registered nurse and a long-term care specialist with LTC Financial Group. And she is here to talk with you about give us some perspective on the size of what you need to plan for with long-term care needs and what are some of the options for how you can cover yourself financially. So I'll go ahead and turn this over to Deb. Thank you.
Well, thank you, Leslie, and thank you to Mosaic for having me here and providing such good information to their clients as well as the community. We really appreciate it. So we'll go straight to our agenda. Uh-oh.
Give me just a moment. I'm going
to. Okay. So with our agenda, we're going to talk about what's been happening since 1935. We have a new reality with risk and many challenges that we should be aware of. What the real risk is, well, it might be a perfect storm that's brewing, and so we're going to talk about that so you're aware of that as well. There are different solutions when you're planning for your long-term care needs, and I'm going to go over those as well and how you'd start with your planning. Lots of challenges now with health qualifying. If you are interested in getting any kind of a long-term care insurance product, the health qualification is always important, and that is what is it bases the approval on the policy. So we don't want you to wait because they're seeing lots of claims and they're tightening the belt on that. Ultimately, it comes down to two funding options to pay for long-term care. So we're going to talk about a lot of good information, and my hope is that it will help you to do your own long-term care planning. Rosalind Carter, we're going to start with a quote from her. With all of her advocacy work with the mentally ill and the aging, she came to the conclusion that there are only 4 kinds of people in the world. I know I can't see you, so you can't raise up your hands, but most of you probably are writing notes, and I would like you, as I go through these, to write down which one or which ones of these situations that you might have been in or you think you might find yourself in. There are those people that have been caregivers, those who are currently caregivers, those who will be caregivers, and those who will need care. Those are the 4 kinds of people that Rosalind says we have in this world, and I will say that at least 3 of them, I can say that I will probably be in those shoes. I have been a caregiver to a grandmother. I will probably be a caregiver to my parents, and with longevity on my side, I probably will need care. So lots of planning and lots of different positions that we will find ourselves in our lifetime. So we're going to start with a quiz. What has happened since 1935? The average life expectancy. Now, on your notes, write down what you think the average life expectancy was in 1935. Let's see if you're right. Wish I could see you out there, see how many people got it right. How about the average life expectancy for a woman today? 83. And the average life expectancy for a man today? 78. Right now, 85 is the fastest growing age population that we're seeing. We've added about 30 years to our life expectancy, and every year that we have a birthday, we can add another 12 weeks onto our life expectancy. So nice birthday present there. It's projected that by 2040, our 85 and older population will will increase about 250%. We were at about 4.3 million in the year 2000, and we're going to be at about 15.4 million by 2040. So I will say that I will be one of those people. The concern there is that with such a large aging population and so many people at the age of probably needing care, we're going to need to have a lot of planning in place to make sure everybody's adequately taken care of. Why are we living so much longer? Well, we are actually the reason. Some of our actions are helping us to get where we are and increase lifespans. Everybody's practicing preventative medicine. We're catching breast cancer, colon cancer a lot earlier now, and because we're catching it early, we're fixing it, and that person's good to go for another 20, 30 years. Advanced technology, most of us do know somebody that's extended their life with a cardiac bypass, we're all paying attention to our diets and our exercise. So whether we're conscious of it or not, our goal is to live a longer lifespan. And what does that mean? Well, with so many aging people, it means that 3 out of 4 of us will need more than our health insurance or Medicare. We do have, I'm not sure how many people have seen it yet, but we do have an awareness campaign that started about 3 or 4 years ago. And the name of that campaign is 3 out of 4 will need more. I'm going to go over a couple of other slides that will help you that'll make that a little bit clearer for you. But we are trying to increase the awareness of long-term care. This is another statistic. It's a common one. There's so many statistics out there, but it really doesn't tell the full story. It doesn't really tell the full story. The Department of Health and Human Services indicates that at age 65, at least 70% of us will need some form of long-term care in our lifetime. However, many of us, when we age to 65, our life expectancy then becomes 80. So I'm sure that's a statistic that you like, right? But when we age to age 80, our life expectancy then becomes 91. And our long-term care risk is no longer 70%, but it becomes 90%. And without any planning, that can be a huge challenge. So planning is key, and I'm hoping that's one of the things that you're going to get out of this webinar today is just doing the planning and getting the facts and seeing which way you should go with your long-term care risk.
And Deb, just to ask you about this, the reason why having a longer life expectancy plays into this is that it's not necessarily a longer active lifestyle.
Mm-hmm. Correct.
So as people get older, then the chance of needing to have some sort of caregiving.
Right. The older that we live, the higher the risk is of us needing long-term care. Mm-hmm. Exactly. And so we want to live a long life, and like I said, a lot of us want to make it to at least 80 or more. But we need to do some planning for that. On this next slide, we're going to talk about a comparison of catastrophic risk, and in the middle is our money. That's your life savings, your nest egg. Takes how many years to accumulate a nice nest egg for yourself. However, when you're looking at that nest egg, you want to protect it from major risk, because a lot of things depend on that nest egg. Your lifestyle, when you retire, your financial security, and when you retire, what kind of lifestyle you'll have then. So we do want to make sure that that nest egg is protected from catastrophic risk. One of the risks that we face as homeowners is getting homeowners insurance. But what are we really concerned about when we get homeowners insurance? Are we concerned that the fence is going to fall down? Not at all. We're concerned that the house might burn down. The risk of that happening is 1 in 1,600. When you look at other risks, you're going to see that that risk is actually the smallest risk that we face today. We have car insurance. What are we worried about with car insurance? We're not worried about a fender bender. Well, some of us are, but we're really worried about catastrophic. We're worried that an accident could cause a disability for somebody, or maybe somebody could lose their life. So that's what we don't want to happen. So we try to be very safe. However, we do need to have insurance to make sure that we're protected. On the other side, we have our health insurance. What are we concerned about when we have health insurance? Many of us would not feel comfortable going a day without our health insurance. We're not concerned about the common cold. We're concerned that we're going to end up in the hospital and have to have surgery or be diagnosed and have to go through some kind of a treatment that can be very costly. You can see with the 3 risks up there, the biggest risk right now is you're going into the hospital. At age 65, the risk of that happening is 1 in 13. We've got a couple of walls of protection on the screen to protect that nest egg in case you do get in that car accident or you are in the hospital. But let's look at the top one again on your homeowner's insurance. When the house is paid off, it's such a small risk, the lender's not telling us that we have to have insurance anymore. Should we just cancel our homeowner's insurance? The kids are likely gone if the house is paid off, so we're not worried about them burning down the house anymore. No, we still want to have our homeowner's insurance. And again, when you look at it, our homeowner's insurance is so much less than our car insurance and our health insurance. Have you ever thought why that is? Why is the homeowner's insurance less than the car insurance? And why is the car insurance less than the health insurance? It's because the higher the risk, the higher the premium. Now we have a new risk on the block. It's called long-term care. With advanced aging, this is a new risk that many of us need to understand. At age 65, 1 in 2 women and 1 in 3 men are likely to need some form of long-term care. So when you look at the screen, the top 3 risks are the ones that we have been insuring since 1935. But we're living 30 years longer now, and our whole focus is to protect that nest egg, because what is our concern because of longevity? That we might outlive our money. So it becomes very important to try and protect that nest egg. Having a discussion on how much of that nest egg to protect, if any at all, is important, and it's going to be beneficial for you to make sure that you do stretch out your dollars and make sure that it is protected. Many people, there's so many myths out there about what long-term care really is, and basically long-term care is any kind of assistance that you might need due to a chronic illness or disability, whether that's because of a physical condition or a cognitive condition. You're going to need assistance with your activities of daily living. Those are bathing, eating, transferring, things that we do every day but we never think twice about. But long-term care focuses on the caring aspect of somebody. Your health insurance and Medicare are going to focus on curing somebody. So we're going to talk more about that as well. But just to know that long-term care can happen at any age. In fact, we have a large population today. At least 40 to 45% of our population today that is in care is under 65 years old. They are working age adults between 18 and 64. So the earlier we plan, the better off we're going to be. But just so you know that caring is the focus of long-term care, because most of it is in the home setting. Some of the common causes as we age, you're going to see that care is due to more health conditions, strokes, cancers, diabetes can be very complicated. Arthritis is a large cause of long-term care claims. However, Alzheimer's is the largest cause of long-term care today. When we're younger, and we do have a very active baby boomer population, care is caused mainly from activities, injuries. And because we are practicing preventative medicine, We are seeing more and more early diagnoses of Alzheimer's, MS, Parkinson's, those type of chronic conditions. Remember I talked about the 3 and 4 Need More campaign? This slide is going to help you to understand that a little bit more. And the best way to explain it is to talk about what the guidelines are right now on what health insurance and Medicare pay for. So if you are hospitalized, you have to be hospitalized for 3 days and then be discharged into a skilled nursing facility. If you meet those guidelines, then health insurance and Medicare will pay up to 100 days of your care. However, the guidelines are that you have to be medically improving. So you go into that skilled nursing facility, the first 20 days, if you are medically improving, are paid at 100%. Day 21 to day 100, then there is a copay, but your health insurance and Medicare will pay the rest of it. After day 100, we pay. If you are doing rehabilitation, any health insurance plan is usually going to have 15 to 20 visits or maybe 60 days of rehab in there for you. However, after that, we pay. Custodial care, if you look at your brochure for what your health insurance is going to pay for, you'll find that they really pay very little towards custodial care. Custodial care is mainly long-term care. So, did you have a question?
And I was just going to make a comment, and that this is where I think a lot of people sometimes think that they have something covering them because they have health insurance or they're eligible for Medicare. Mm-hmm. And so obviously, if I'm ill or if I have an accident, that's what I have the health insurance there for, to cover myself.
Right.
But really what they're talking about here, it's almost like they're talking about once you get into a situation where you're just managing a chronic condition. Mm-hmm. Is that more like what you're talking about here?
Absolutely, and that's what most of us assume. If something happens to me, my health insurance or Medicare will pay for it, right? Mm-hmm. Right? Well, and so many people are learning the hard way that there is a gap when it comes to health insurance and long-term care costs. And if we haven't, when you've done your retirement planning, if you haven't included long-term care costs, then you can find that your goals and the plans that you've been working on so hard might not happen because you could deplete your nest egg with these costs, and you'll see that they're quite high. I know that I did the comparison of risk, but I do believe that the more we understand the extent of a risk, the more we're going to make decisions that we won't regret. So I want to go over another study with you out of 1,000 people. And out of 1,000 people, 5 will suffer that catastrophic loss of their home due to a fire. Out of 1,000 people, 70 will have that car accident that is serious enough to warrant a claim. And 600 will need some form of long-term care. A lot of people would really like to just ignore this risk. and I get that because it's not an easy discussion. Some people don't like to think that one day they might not be able to care for themselves. However, with just a little bit of a discussion, anybody can find out, what are the consequences if I want to retain this risk, if I want to self-insure this risk. What does that picture look like? Or what if I want to transfer the risk to an insurance company? Or just reduce my risk. You can co-insure. You don't have to do full insurance. All of these options are fine, but they all take a discussion. You spend a lifetime building up a nest egg and trying to make sure that you have good financial security for yourself as well as your family. And this is not, it doesn't take that long to do long-term care planning. At least it doesn't take a lifetime, but it can impact your savings and your goals if you don't have that discussion. These are numbers that came out of the Genworth 2013 Annual Cost of Care in San Francisco. And you'll see that For, home care, homemaker service or home health aid, and last year we were looking at about $55,000, close to $60,000 a year. And that it really depends on how many hours that somebody's requiring care. Home care can be just as expensive as nursing home care because it is one-on-one caring. A lot of people like assisted livings. Those really are the most cost-effective place to have care. And the reason for that is because when you can see that the cost of care in the home is more expensive than that assisted living, you have to think about that when you're at home. You also have the your mortgage or your insurance and food and things like that. So you have overhead at the home as well. In an assisted living, if you've already sold your home, you don't have the overhead of home costs, and food is supplied as well as your shelter and as well as your care. And they are coming around with some very beautiful assisted livings. For a semi-private room in San Francisco last year, Genworth is stating about $150,000 a year, and for a private room, we're looking at about $200,000. And I know that these numbers can be quite scary. However, I see care at all different costs. It depends on where you're getting that care. So,
I was going to say, yeah, it's almost unfathomable how somebody could end up having to pay all of this out of pocket if they were forced into it. But right. I think that gives a good example of why we're saying it is a big risk for you financially. And if you're talking about a couple, if one person needs the nursing home care, well, you still need to have additional money for the other person to live on as well. You don't want to just put all of the money towards the one that needs the care.
And that's a great point, Leslie, because what we're seeing today is that generally husbands need care before their wives. And if the wife most of the time husbands are big guys and the wives can't really get them around. And so you might have to hire somebody in the home setting or go to an assisted living or go to a skilled nursing facility. And if they need care for a few years at $200,000 a year, you can see how that could impact somebody's nest egg quickly. What we're seeing is that women generally need care 5 to 10 years after their husbands pass away. And at that point, if they did deplete the nest egg, or to a certain extent, if they were retired or not working anymore, they really weren't able to grow it again. But however, the cost of care keeps going up. So the wife's cost of care is even more expensive than the husband's. So whatever is in the nest egg, she will go through that a lot quicker. And that is why we're seeing more women residents in skilled nursing facilities than men, is because many times they do go through the nest egg and end up on in a skilled nursing facility on Medi-Cal because they don't pay for home care.
Right.
So, and it's not always because they need to be there physically, it's because of financially they ran out of money. So we always have to think about the spouse too. So very good point. As I said, I see all kinds of different numbers. This was a study, and these are some numbers from 2010 stating, the national average is about 90,000. So what you really want to think about is if you needed long-term care, how long would your money last? So if you're looking at numbers at $90,000, $100,000, $200,000 a year, how long will you be able to take on that expense? Long-term care can actually be the perfect storm because it is a risk with a high likelihood of occurring with potentially unlimited exposure. So that's the main question, is to really understand that. Some of us can pay for a couple of years for long-term care, but we don't have a crystal ball, so we don't know who's going to have Alzheimer's or just that chronic condition that is going to go on for many years. Right now, 82% of care is in the home setting. That is where the majority of people would like to receive their care. The average length of stay at home is 4.5 years. And for Alzheimer's, we're looking at 3 to 8 to 20 years of care that we're seeing people need. My stepmother's mom had Alzheimer's and she needed care for 20 years. She died at 101. Yeah. So, Alzheimer's is one of the biggest claims that we're seeing. Genworth stated in their 2013 annual report that 48% of their claims were for Alzheimer's situations. And the Alzheimer's Association has projected that the cost for Alzheimer's, for care for Alzheimer's in 2050 is going to be $1.2 trillion per year. So that's an enormous, that's an enormous amount of money. If you're looking at long-term care planning, I think it's always good to use the statistics to see, what's being used today. In nursing facilities, the stays are about 2.5 years. I have seen statistics that have increased that to about 3 years. And fewer than 15% of those residents are staying longer than the 5 years. So, and one thing, when you are doing your long-term care planning, it's good to understand that a lot of people start with home care and then they go to skilled nursing facilities, or vice versa. So you could, have a little bit of both. I know with Alzheimer's, many times families do try to take care of them in the home setting until they require too much care, and then they usually go to an assisted living or a skilled nursing facility. What I always like to do is tell clients to have a heart-to-heart with themselves. Ask yourself some questions about who's going to take care of you. If you needed care today, who would take care of you? And people that are at home, write down on your notes, pick a person. That person that you think is the most reliable person and you know they're going to be there for you. Write that name down. What if you needed to take care of somebody? Could you do that? Are you still working? What is your lifestyle? What occupies your days? And so if you had to take care of somebody, what would you have to give up? When you take care of somebody, it's a very stressful situation. We all do it out of love. However, what we're seeing for working caregivers, and we have millions of them, is that they're having a lot of health issues, a lot of depression, a lot of back issues. We're seeing at a time when we're trying to keep healthcare costs down that working caregivers' healthcare costs are 8% higher than non-caregiving workers. So we see that it is definitely taking a toll. And if you were taking care of somebody or they were taking care of you, how is that going to impact the quality of somebody's life, of your life, of their life? I know that I had some surgery a few years back, and I was going to be, I had to take it easy for just a few, about four to 5 weeks. I was taking care of myself, actually. My family just had to do the laundry and walk the dog, and after a week, they were exhausted. So, families can hang in there if it's a temporary situation, but if it goes on for a long time, we might be asking more than they can really give. And one thing we have to think about is, the person that's going to take care of you, are they working? Do they have a spouse? Do they have children, your grandchildren? And if they have to take time off of work, how is that going to affect them financially? And when they are taking care of you, what is happening with everything else in their life? So some things to consider and look at this in a realistic manner. We're going to see that long-term care is going to affect generations. It's affecting them now, and it's affecting them, and it will continue to affect them, especially when there's no plan in place. I will share a short story. My grandmother that my sister and I took care of, she needed care for about 7 years, and it was more of a progressive care. But my sister was the primary caregiver, and my grandmother lived with her, but she has 3 children, she had 3 children as well under her roof. One that was a special needs child. What do you think happened when my grandmother's care started to increase? Who got all of the attention? It was my grandmother and her special needs child. When my grandmother passed away, we realized that my niece had no love lost for my grandmother, because for over 7 years, she looked at my grandmother as taking her mother away from her. So that was sad, because she really lost out on getting to know her grandmother, and I know my grandmother would have loved to have had a good relationship with her. So when I say that it does affect generations, it does affect generations. When are most people going to plan for long-term care? Unfortunately, sometimes when it's too late. Like I said, we are seeing claims now, so we have claims to analyze, and we're seeing what is causing long-term care claims. So they're tightening the belt, and so I'm hoping that if you are thinking about looking at long-term care, and especially if you're thinking about you might want to have insurance pay for some of this cost, that you do that earlier than later to have a better chance of getting the coverage that you might want to have. This is the percentage of declines according to health in age-related issues. In the black percentages, that is the year 2012, and in the red, that is the year 2013. So you can see in 2013 we had more declines because we are tightening, the insurance companies are tightening the belt on what they will approve and what they won't approve for health in underwriting. And you can see as we get older, those decline rates are increasing. And this is one of the biggest problems that I have now in researching companies when my client has a health condition to try and get them coverage with a good company. I know many of us think we're too young,
Right.
right? We have a large aging population, or not an aging population, but we have a large population that needs care today that are under 65. So, I don't know what age to tell you that is the best age to get long-term care insurance, but I will tell you to get the facts and then go from there. The premiums are based on your age when you apply and your health, and in most states, your sex. So in California, we are only one of 3 states that has not implemented gender-based premiums at this point. All other states have already implemented that. And the reason for that is that women are needing care more often than men. As you'll see, in 2012, there were $6.6 billion paid in claims, and 2/3 of those claims were for women. So the insurance companies are kind of going back to the same rationalization as why life insurance is more expensive for men. It's because historically men pass away at earlier ages than women. So they always enjoyed higher premiums for life insurance. Well, the same thing is happening with long-term care. Women are needing it more often and for longer periods, and so premiums are going to reflect that. Again, eligibility is based on your health at the time of application, and I know I've given you lots of gloom and doom, and you're probably thinking nobody can get long-term care insurance. However, many people can. You can get long-term care insurance if you've got diabetes and it's under control. You can get it if you've had breast cancer and there was a waiting period and only so many lymph nodes were involved. You can get it if you have arthritis but you don't have any mobility issues at the time. So speak with a long-term care expert just to find out if you can qualify. Don't just assume that you can't, because you might be pleasantly surprised.
Do they also ask questions about family history as part of the underwriting process?
Yes, a couple of the insurance companies now are asking about family history and, is there any heart disease or Alzheimer's or things like that. Some of them at this point will let you check the box that says you don't know.
Okay.
But I think that will change in the future. Many insurance companies are saying that they are using that information for research. So yeah, it is becoming a little more like life insurance when asking those types of questions.
But as far as making the decision for yourself, I would think you'd also want to kind of think through that for yourself as well.
Exactly, yes. You know, if you have a history of Alzheimer's in your family or heart disease, you know, I would definitely be looking, or longevity, you want to look at long-term care insurance or long-term care planning sooner than later. Mm-hmm. Absolutely, if there's a family history. If you want to look at insurance, make sure you have a heart-to-heart with an expert, somebody that specializes in long-term care planning. Long-term care, it certainly has a financial aspect of it. However, it has an emotional aspect to it as well, and it does affect families. So you really want to share with that expert, you know, what your concerns are, what your goals are, what you would want to have in place should you need care. You want to be as honest as you can about your health situation, because that specialist is going to be on your side. They're there for you, and they'll be able to research different companies to see which company you would have the best chance of getting coverage through. You want to make sure that you work with somebody that represents many companies and many solutions. You don't want to just look at one company. You want to look at good companies. Companies, look at their ratings, their size, the time that they have been in long-term care insurance. You want to make sure that that company has been selling long-term care insurance for 15, 20, 25 years. When you look at a product like this, the first 15 years, really the insurance company doesn't see a lot of claims. It's after 15 years is what we've been seeing is when the claims start to set in. So the first 15 years, I mean, if you had somebody just giving you money and you never had to spend any of it, you'd be looking pretty rosy. It's when the company actually starts to pay those claims is that, you know, you want to see what they're really made of and what their commitment is to the long-term care industry. When you design a plan, always keep in mind what that plan is going to do and how it's going to help you to stay at home or be in the facility that you'd like to be in. How will it help your family? Things like that. Make sure that the plan design complements what your goals and your needs are.
Is it more than just a matter of picking somebody with good ratings and low costs and easy underwriting? Are there other factors that an expert can kind of give you insight into as to like how they are on customer service level and easy to make your claims and get claims paid?
Right.
Are those also things that, that an expert can help you with?
Yeah, because you know we're the ones that work with the company hand in hand, and so we know what their customer service is like. And if you've been in the industry for long enough, you've had several clients go on claim, and you've been able to experience that piece with the company. And be able to help your client. I'm going to be sharing a case study with you, and that it's unfortunate that it happened with my client, but I feel very good that I was part of helping them to look at their long-term care planning and that they had it in place when they definitely needed it. Mm-hmm. So yeah, it's not always going for the cheapest company. You want to go with a well-respected company, an ethical company, and a company that has deep pockets because long-term care is expensive. So many people, you know, say, oh, you know, I want to stay in my own home, and that's great. If you have a comprehensive policy, you can stay in your home, go to an adult daycare, assisted living, or skilled nursing facility. If your goal is to stay at home, you have to have a plan because there's two issues with that. One is you have to find good care, and two, you have to pay for it. So it's one thing to say that you want to stay at home, but sometimes that doesn't always happen if there's no plan in place. What we have found in the long-term care world is that the products now, most of them have care coordinators. And in the past, what happened was you'd get a check, right? But the kids were really the ones that had to coordinate your care. But they were working, and so they could only take so much time off of work before maybe their job was in jeopardy, or things were falling apart at home. And so we found that many people ended up in skilled nursing facilities before they really wanted to, just because that constant coordination of care in the home setting became difficult. With long-term care insurance, all these policies come with care coordinators now, so that they can assist families with gathering resources and really decreasing stress. And and sometimes, like I said, people can start at home, end up in an assisted living or a skilled nursing facility. And if the children are out of state and you decide you want to go to an assisted living, they can help you to see where the best assisted livings are, and answer questions for yourself as well as your family. So we find that people are able to stay at home much longer since we started providing the care coordination.
And that also seems to be a good option even if you have a family member who's going to step in and provide the care themselves. Knowing that you have support would make sure that person doesn't get burned out.
Exactly.
That they can handle that burden for a much longer time as well.
Right. Because the caregiver can feel very isolated. And I know that even people that can self-insure this, a lot of people will get long-term care insurance. Maybe they don't get full coverage, but they really like the aspect of having care coordination for their family, so that their wishes can be made. And the other part of that is, once there's already a plan in place, then it can diffuse a lot of different issues and mindsets among our children of, one thinks we should go there and the other one thinks we should go here. When you have a care coordinator, she can explain things, and the cost is already taken care of, and the resources are there, so it really does bring down the stress of everybody. So very helpful.
Plus, I would think that having gone through this exercise of thinking about what options you want to have available to you gives you a chance to communicate those to the rest of the family much earlier, rather than in the stress of the moment when you're also dealing with having to now learn how to manage a chronic illness or a condition.
Yeah, there's a lot of different things that happen when somebody needs care. It can be a progressive type of condition, or it can be an acute situation, and then everything just kind of falls apart at one time. So having a plan in place is going to be very beneficial for everybody. Ultimately, it really does come down to two funding options, what to pay for your long-term care. You can liquidate your taxable funds from a portfolio, basically self-insure if somebody needs long-term care, or with long-term care insurance, these policies are tax qualified, so the benefits are tax-free, and you would be able to enjoy those tax-free benefits. One thing to consider is that if you're in a couple situation and one of you ends up at a skilled nursing facility or assisted living, but the other spouse is still living at home, your cost could triple overnight, because you've still got the home to take care of, and then you've got the cost of care of your loved one. So it's important to understand that, and why I bring these up is because I really try to paint a realistic picture for everybody, because sometimes these things are kind of overlooked, especially thinking, well, Medicare or health insurance will pay for that, right? Unfortunately not. So,
but that was an interesting way to look at that, and that's that, if you're paying out of pocket, let's say you're having to make withdrawals from your retirement accounts, then all of those withdrawals have to be paid. You have to pay taxes on top of those withdrawals in addition to having to pay the cost of the care.
Right.
That's where you're seeing the taxable cost of that. Whereas if you have a benefit that's coming from the insurance company that's just paying for it, there's no additional tax on that benefit.
Right.
Because you paid the tax when you paid the premiums earlier.
Exactly.
So that's,
yeah. I mean, even clients that have real estate and they feel like, well, if I need long-term care, I'll just sell
my house.
But, you know, there's capital gains and, you know, and right in the middle of care is a stressful time, and then you add having to sell a piece of property to pay for care on top of that. You would find that getting insurance would be pennies on the dollar compared to self-funding some of these costs. So I want to go over some frequently asked questions. We're just going to do a couple of them because I want to do a case study with you, and then if anybody has any questions. One of the questions I hear all the time is, can I get it? You know, I have this health issue or I have that health issue, and I know we've gone over that. The only way to know is to work with somebody that that does represent several companies so that they can do their due diligence for you and find out if your health condition can be covered. That's the only way to find out. Don't assume that you can't get it because you know, we have evolved with several new products over the last few years. How much does it cost? That's number one question, right? Again, long-term care, if you want to get insurance, these products are all custom designed to meet individual needs. So it can cost as much as you want or as little as you want. It depends on how much coverage you feel is going to be appropriate. And one of the biggest questions that when I'm designing a plan is to talk about people about how much do they feel that they could pay for the cost of care. How much are they comfortable with paying? And so once I have that answer, then I can design a plan to fill a gap. That way we're not over-insuring somebody or under-insuring somebody, but when you need care, you can pay some, they can pay some, or however you had designed it. So, and again, it does go according to the age that you are when you apply, as well as your health when you apply. How we trigger benefits for long-term care, the universal definition of what long-term care is that you'll need assistance with 2 activities of daily living.
Excuse me.
Bless you. 2 activities of daily living, or you have one condition, which is a cognitive condition. Whichever condition you have, you're going to need assistance. That condition will last for at least 90 days, and you will need assistance for that 90 days. That is the universal definition of what long-term care is. Your doctor will state that, or your practitioner, and the insurance company will confirm it. And once it's confirmed, that would trigger benefits on a long-term care policy. I know there's other questions, but I have to say that, you know, speak with an expert so that you can design your own plan that fits your needs. So this is a case study that I would like to share with you. In 2004, I sat down with a very wonderful doctor and his wife. At the time, they were ages 59 and 55. They had 2 children, lived in a gated home, and my first question when I got to their home was, why am I here? They had a tennis court. It was absolutely beautiful. You know, they had assets of $4 million plus. The wife was very concerned because she felt the husband was the main breadwinner, and she felt that if he needed care, that she would not be able to pay for that kind of care for him, and their whole life would change. She could get more coverage, or she could get less coverage, because if she needed care, he could pay for a certain amount of it. But we decided to go ahead in 2004 with $190 a day, and they wanted a small deductible. We call that, that EP stands for an elimination period, so that's a 30-day elimination period. We did put 5% compound inflation protection on the policy so that every year that $190 a day would increase by 5%. And at that time, insurance companies were still offering lifetime policies which are also called unlimited policies.
And what you just went through here, these are like the main components of a plan.
Mm-hmm.
You have how much they're going to pay. You have how long you have to cover out of your pocket before they start paying.
Right.
You have whether or not there's an inflation adjustment,
Mm-hmm.
and you have the length of time the coverage lasts for you.
Correct.
So those are all kind of like the major features of every plan that has to be decided on when somebody creates it.
Correct. Okay. Correct. And it's all designed on how much, what their thought process is on insurance and what they want to have in place should something happen.
Mm-hmm.
And, they could have probably paid, they could have supplemented this a little bit more, but they decided that they could afford the premium, and the premium would be less than them supplementing it.
Mm-hmm.
So we went with the $190 a day. The husband's premium at age 59, he was paying about $3,000 a year for his policy. 4 years later, the husband was diagnosed with early onset Alzheimer's at age 63, and he went on claim. With long-term care insurance, after that 30-day deductible was satisfied, his premiums stopped. So he only paid 4 years of premiums. To this point, to today, the insurance company has paid about $458,000 for his care. He is in a skilled nursing facility at this point. And his premium, his benefit has increased to over $8,600 a month. Again, that will continue even though he's not paying his premiums. His daily benefit and his monthly benefit will continue to increase by 5% a year for as long as he lives. Those benefits are tax-free, and his wife is definitely enjoying the care coordination. I will tell you that the wife did not call me for 6 months after he was diagnosed. She was trying to coordinate care through the home. Mm-hmm. She was so stressed, she forgot that they had a comprehensive policy. Mm-hmm. And so the insurance company did reimburse for his care.
Oh, they went back?
They went back because it was a cognitive condition.
Mm-hmm.
Right. So I was very happy to have helped this couple without the long-term care insurance. I don't really know. I know they had a lot of assets, but it did change their life anyway. Without the insurance, he would not be getting the care where he's at. So benefits of planning, get the facts, make an informed decision to see which way you want to go with it. You're going to have a lot more control over what you want to happen, feel a lot more secure about your future. You will avoid the crisis management. And what I always tell my clients is that long-term care planning is a gift to yourself as well as your family. So I hope that this was helpful for everybody in your long-term care planning. Thank you.
Thank you very much.
I can't take questions. Do we have any questions?
So this is our time we have for questions. If you'd like to go ahead and enter them in your screen. Some of the questions that I know have come up that do frequently come up are, are there things you can do that you can do to lower the cost of the insurance plan if it's a little bit out of reach for you?
Exactly. And it's always a balance when you're designing long-term care insurance plans. The first question is, how much can the client pay for their own costs, and how much do they want to pay? So there's always a balance there. Then going to a benefit period, if there's longevity in the home setting or in the family, then we want to make sure that we try to go with a longer benefit period. The elimination period is the deductible, and it's always a question of, how long can the client pay for their care before the insurance company dollars kick in. One thing I always have to go over is inflation. Inflation is a huge factor in long-term care. If I told you today that the cost of care for 90 days of care might be $18,000, many people would say, oh, I can pay for that. But if that person is 50 years old and they don't need care until they're 80, then they might be looking at $75,000 to $100,000 at that point. So we have to look at the difference between the cost of a 30-day deductible or a 90-day deductible, and then project into the future and see what the cost out of pocket would be, to see, is it cost effective to just do the 30, or is the 90 okay? Mm-hmm. And you know, understanding that health insurance and Medicare, you know, they'll pay up to that 100 days, but that's not a guarantee, and who knows what their guidelines will be 30 years from now. Mm-hmm. So, yeah.
And I had the next question in mind. Oh, when you start paying premiums, is it worth it to go? I know we looked at the fact that it gets more difficult to even qualify for the insurance the later you wait to start it. Mm-hmm. But I'm assuming that the premium is higher if you start later.
Yes.
As well.
Yeah, you'll see that the earlier you start, when you end up going on claim, you know, 20, 30 years later, you're going to recoup your premiums a lot sooner if you bought the policy at a younger age than an older age. Yeah,
because they were lower, even though you paid them for a longer time.
Exactly.
Okay.
Exactly.
So somebody buying insurance at age 50 and paying until age 70 pays less than somebody who starts at age 60 and then needs at age 70.
Correct. Okay. Correct. Exactly.
And can the premiums increase over time?
Yes, the premiums can increase, and I tell my clients, you can guarantee you will see some premium increases in your future. The goal is, you know, that they are they're level. We've learned a lot in the last 30 years with long-term care. When we first started out, there were no claims to analyze, and assumptions that were made on claims and how long they would how long claims would be were very conservative. And then you combine that with the low interest rate environment that all of us have been exposed to, including insurance companies. They have had to increase rates. It hasn't been like health insurance or you know, that type of a thing. But another reason to plan early, and what I tell my clients is, you know, you get it when you're younger, and when you have that rate increase, maybe things have changed in your life. Maybe the kids are done with college, maybe the house is paid off. Maybe you don't need as much insurance anymore, because remember, the value of your plan has increased as well. So, so we have options down the road.
Mm-hmm. And so, in experience, what people see in their actual experience is they don't tend to happen that often, the rate increases, or is that?
Yeah, I mean, and again, you have to go with a good company. I have had my policy for 15 years, and I've not had a rate increase. Mm-hmm. But, you know, I mean, there are rate increases out there. Stick with good companies, big companies. Look at their ratings. Make sure that they are dedicated to their long-term care division. Those are all good things to look at.
And then one question we had from our viewers, she pointed out that her care insurance, her policy actually says that 4 out of 6 conditions have to be met before that triggers a benefit. Is that, but you had said that usually it's 2 out of 2 of the activities of daily living, mm-hmm. which I know is also Social Security's requirement for triggering disability insurance, or disability mm-hmm. from Social Security, is if you can't meet 2 of your activities of daily living. Right. Is this something that's actually a variation you see between different plans?
Today, we're not really seeing that. And again, you have to, when you get long-term care insurance, you want to make sure it is with an insurance company. Other companies that sell long-term care insurance but don't have to adhere to the Department of Insurance guidelines, they might have those type of guidelines in their policy. Today, all of the companies that I represent, they are the top companies here, and all their comprehensive policies are all 2 activities of daily mm-hmm. living. So, yeah, I don't know, maybe it's an older policy, or
mm-hmm.
yeah.
She said it was with Allianz, and it's been almost 10 years. So
okay.
it was an older
Okay.
policy.
Yeah.
Something to look into. You had said that inflation was a really important factor.
Mm-hmm.
Are there any other like must-have features that are really beneficial for people?
Well, I think when you sit down to design a policy, inflation is, depending on age, is very, very important. And I know 15 years when I first got into this business, at age 80, we were no longer, we didn't recommend any inflation protection. But I don't know, now that people are aging to 100 years old, those plans really need to be designed appropriately. So there are age limits when it comes to inflation protection. I think the next thing would be to design, you have to make sure that when you design a plan that it's going to be affordable for somebody. Everybody wants the biggest house on the block, but that's not always necessary. And so you might want to at least make sure that you design a policy that maybe is shorter and fatter. And so at least if they need long-term care, if it's a 2-year policy, but in the first 2 years they exhaust that policy, but they didn't really have to touch their own assets, at least they're stretching out their dollars, and it was affordable in the interim. So affordability is very important. You don't want those premiums to take away from your lifestyle, but you also want to make sure that it's enough coverage to pay for the kind of care that might be needed, as well as protect the surviving spouse that doesn't need care.
Well, I think that's all the time that we have for today. I want to thank you all very much for attending. I know there's lots of, once you get into this, there are a lot of different facets to this area to cover. So please do feel free to reach out to Deb. Her contact info is on the screen. Also, please do also contact us here at Mosaic Financial Partners. We're always happy to help bring in the resources that you need in order to get your questions answered. And thank you very much for joining us today.
Thank you.